All right, everybody, welcome back to the Cashflow Chronicles. It is June 20th, 2024. Are we on season 2, episode 6? Chris is drinking some delicious liquids from the Boba Bar. Nvidia, slight pullback. Dutch Bros 38.61. Apple still hanging about 210. SPY just hanging out below all-time highs of 54.50 or so. The Q's still on a run. Palantir above 25, hit 26 at one point. Google hanging out at 175 still. Amazon hanging out at 185. Bitcoin just crossed back above 65,000. Oil back above 80, surprisingly. And Henry Hub gas 271. Mr. Patel, how you doing? Anything to note today before we kick off the intro?
I just woke up.
I figured. It's all good. I know you're.
I was like, wait a second. It's Thursday. Oh, yeah. And then cash flow. And then, yeah.
All good, my friend. All good. We will get back after it after these important messages.
Greed is good.
The stock is going to go up, down, sideways, or in fucking circles. It's all a fugazi.
Sell it all.
Greed is good.
Huge upside potential, upwards of $60,000.
All right. It is another great day to be here with Mr. Patel. So Chris called me yesterday, or maybe it was 2 days ago, and we were talking about specifically Warren Buffett. Why the hell does he keep buying Occidental Petroleum so much? And so for those of you guys that don't know, Warren has been buying Oxy since the 2020 timeframe. He might have actually started maybe in 2019. I'm not sure. But he definitely was helping shore up some capital for them right after they did their Anadarko merger and right during the pandemic timeframe. And we can maybe touch on a little bit about the preferred shares that he received. But basically, as of today, he owns about 29% of Occidental Petroleum. He's stated publicly that he does not want to own it outright. At his current position as an investor, he has the ability to own up to 50% of the organization without taking it under full or partial ownership, or operatorship, I guess is a better term, because obviously he owns 29% of it. And it's printing off a pretty good amount of cash and dividends every single month. He's been able to acquire a position relatively well due to the preferred shares that he got. There's a lot to talk about here with respect to the creative financing he was able to do in order to actually acquire 29%. But before we dive deep into that, we can either just continue on to that notion, or is there any other topics at hand, Mr. Patel?
No, I think that's good. I think energy is probably one of those sectors that there are times where things can get really interesting. And, if you have the mental and probably the financial fortitude to hold on during the bad times, you can make some serious money. Like when you look at Oxy during COVID, when oil prices were just collapsed, that was a perfect time to buy a lot of these oil and natural gas companies. I personally am not the biggest fan of oil and natural gas these days, only because I've been burned by it in the past. But there are times where opportunity does come knocking. Like our play on Tellurian was great. Next Decade, that was another good one. By the way, have you been seeing TellZ lately?
I know we talked about it on the phone, and I briefly looked at it the other day. But I think with the backing and also obviously the sale of the Upstream assets, I think people are a lot less concerned now about the bankruptcy of those preferreds. So I don't know what it's up to. Is it up to 17?
It wasn't preferred. Remember, it was a baby bond. It's not.
That's
what
it was. Yeah.
But it's at 17 now.
Okay. Very good.
Yeah. I mean, we made our money in the common, but that is where the money, man, I'd say that this is one of the tragedies of investing sometimes, where you have to really weigh risk versus reward a little bit. And the one thing, after we had basically took our profits at the top on Tellurian, I wish we took some of it and just piled it into the to the baby bonds instead, because that would have been a nice little return on top of it. But whatever, man, you can't win them all.
You can't. Yeah, and I think I forget what we sold for, but
Snowflake.
yeah, probably, but ended up doing not too horrible.
Yeah.
I don't think it was exactly all Snowflake, but yeah. But can I take a gander as to why I think that Buffett is buying so much of Occidental?
Go for it.
So you continue to see this consolidation, right, of many people in the space, specifically around buying in the Permian, right? Exxon's been very active in buying in the Permian, and we can dive into deeper thoughts about that. Chevron's been buying deeper in the Permian. A couple other companies that shall not be named are also buying in the Permian and deepening their position there. But Occidental, their total company production, maybe I should just share this slide. Their total company production, and this is from their 1Q earnings report here. Let me just make sure I'm not sharing anything proprietary. Total company production is about 1.2 million, right? And so that's not all liquids, right? So that's inclusive of natural gas. So if you make a crap ton of natural gas, obviously, that's going to be counted as oil equivalent production. But if you look at it in terms of how much of their money comes from the Permian, it's a little bit under half, right? They actually have a pretty decent Gulf of Mexico position. I work with some of their assets in the Gulf of Mexico as well. They're trying to deepen it as well. They're doing some exploration. I can't touch too much more on that. But in terms of company total production, about 40 to 45% of it is actually coming from the Permian. That's very lucrative right now. That's very lucrative for a lot of companies that are looking to deepen in the space, right? I think there's a continued war as to who's going to own the Permian, and I think that that's really the whole gist of why I think Warren truly continues to double down on this opportunity. Now, why is that important? I think it's important because Hess was about a $65 billion deal. Chevron just is about to close that deal. It's been announced. It's been approved by the shareholders. It is going through. There might be some little I's and T's that need to be dotted and crossed, but overall, that is pretty much what it is. So you have a company that 45% of its production comes from the Permian. They have a huge legacy position in the Permian, CO2 injection. A lot of these later, not later, a lot of these legacy positions have been held for quite some time, since God knows how long. And now you have this redevelopment of the Permian that's kind of in the forefront of everyone's minds, drilling horizontals, fracking the crap out of it. And they're making 40 to 45%. So just alone in terms of their market cap, I wouldn't be surprised if, and they also just bought more, right? I think that's probably another reason why. I forget who they bought. Was it, I forget the name, but they just bought a $12 billion acquisition. Let me pull it up as well. That was also, I think, very much Crown Rock. Yep. And basically puts them in a pretty strong position as well, to buy in the Midland Basin. So whether or not this is inclusive of this 1.2 million barrels of oil equivalent a day is inclusive of that Crown Rock, not 100%, but they have a very crown jewel like position. And I think that that's probably why Warren sees that, one, it's a well-run company. They took a gamble in buying Anadarko. They won in that gamble, because obviously it was the large pill to swallow back then. They've been able to come out the other side. Okay, so yeah, this says it excludes Crown Rock components. So, and imagine this Permian now going up by about 150 to 200,000 barrels additional per day, which is crazy. So close to 750,000 barrels of oil a day coming strictly from the Permian. I think that's a good reason to continue to buy into Occidental, and I don't think a lot of people are really recognizing it. They're not they're not the pioneers of the world. They're not the other companies of the world that are strictly focusing on the Permian. These guys have plays elsewhere, Gulf of Mexico, places internationally. So people aren't viewing Oxy as this pure Permian sort of focused company, but now over 50% of the production will be coming from the Permian. So it makes you think, look at the continuous acreage position it gives them, right? The blue is the Occidental, the red is going to be in Crown Rock. I honestly think that this is why Warren continues to double down. But anyway, that's just my thoughts. I'm curious to hear what Mr. Patel says. You're on mute, sir.
Okay, sorry. I think it's a combination, man. I mean, can you bring that slide back up again real quick? You see the thing with the repurchase shares right there at the bottom? No, scroll down. There you go. Right there, preferred equity redemption right there. And then also repurchase shares. Both of those things can bring a lot of value to future shareholders. You know, when you combine all the cash flow that can be used to basically reduce debt and instead be used to repurchase shares and also to get back that preferred equity, that means that a lot of that future money is going to go right back into shareholders' pockets. Let's just take a look at their current metrics. Hold on one second. Okay. Can you see the screen real quick? Can you share my screen?
Sorry. Yeah.
Okay. So we're looking at Oxy right here. And you can see here, net income's been kind of on the decline a little bit, but that's primarily because in 2022, you had really high oil prices and then it kind of came down. Depreciation is there, but depreciation is a non-cash expense. Their operating cash flows have steadily been declining, but that's what happens when it comes to the energy sector, right? Whenever the energy sector has these moments where you have a ton of, margin from the underlying asset being, the underlying commodity being sold, you get these huge waves of just profitability that can really propel you for years on end. The good thing is I'm looking at this company overall and I see free cash flow is there. It's starting to come down again. But maybe Warren Buffett sees something else in this company that maybe it's not very visible on this current income sheet. I thought maybe you had to do something with this right here, direct carbon capture. One of the biggest things that we're seeing right now is some huge changes in policy with regards to decarbonization, right? Decarbonization. It's like the mantra you hear all over Congress. The thing is, Oxy has been signing deals left and right with, let me just see right here. They just had one right here. Fusion power. No, not this. Right here. All the money that's coming in, they've been building these plants for direct carbon capture for like literally a couple of years now. And it's kind of interesting. Maybe this is, but then again, I also see this oil giant quietly ditches world's carbon capture plant. I don't know. Yeah, I mean, I don't know what's in Buffett's mind, man. I thought maybe there was something here, but revenues are down, net income is down. I don't know. I can't say for certain what it could be.
Yeah, I mean, here, maybe this will help a little bit. I mean, they're putting about 600 million into some lower carbon emission businesses. So what does that mean? Direct air capture, like you were talking about, they're hoping it's going to be commercially operational by 2025. I think that they're looking at the Gulf Coast sequestration. I think a lot of people are focusing on the Gulf Coast right now and hopefully getting that. So I don't know. Like you said, I was kind of underwhelming with respect to potentially the amount of slides that they really had on this, but I think there's on to something. I don't necessarily know where the future lies with CCUS. Is it going to be as important as it is today under the Biden administration versus it is maybe under a Trump administration. That's something also that's kind of remains to be seen. I know Trump was kind of, I don't want to say backing away from the 2015 Paris Agreement, but he wasn't necessarily holding everybody to it. But you can just see overall, I mean, the expansive amount of production that's kind of coming out of OXY, and they're doing a pretty damn good job of it all. Honestly, I think it's a takeover target. It really is. I think it's one of the last few companies left that is capable to be absorbed. We've now seen companies in the $65 billion range be absorbed in by these super majors. Is it the last big play? And honestly, I think that's probably it. Hess is gone. It's really just Oxy. Maybe ENI is another opportunity for people to dig. Devon might be another one as well. But I think Oxy, in terms of Permian access, is one of the last few big pieces. But yeah, the thing I don't know necessarily about Oxy, maybe this is what you could pull up for me, is the debt position. But I think a lot of the pieces is a lot of people, they might be thinking about oil and gas companies from a net income perspective. That's not the appropriate way to think about most oil and gas companies, because they are very depreciation heavy. And so what does that mean? There's sort of what they call depletion costs associated with oil and gas. So you're investing in a lot of facilities. And so what that is, that depletion costs that Chris kind of showed, the depreciation costs about $6 billion a quarter. That's associated with obviously getting a tax break, right? Obviously, if you invest a lot of money into these things that are depreciating, oil and gas assets are depreciating, that alone allows you to get some sort of a tax break. So if you look at oil and gas companies, there's kind of like funny money associated with it, right? So they're making a decent amount of money from a net income perspective, but not the entirety of the cash that's coming into the company. So if you think about it from a net income perspective, you say, oh, we only made $3.5 billion in 2023. But if you look at it from a actual cash into the company perspective, you remove that depreciation cost, it really shows how much additional money they're kind of generating. And you almost want to look at it almost as like an EBITDA, but at the same time, EBITDA is also a funny number because, you can hide things in there as well, and it doesn't necessarily incorporate all of the total expenses. But Chris kind of hit the nail on the head with respect to probably looking at the ops cash is the most important piece. So you could see about $11 billion worth of ops cash coming in. That's pretty impressive. And then obviously you have to balance how much you're actually paying in capital expenditures, because these are very capital intensive businesses. And are you monitoring how much dividends you're giving back to your shareholders and buybacks as well? You're on mute, my friend.
So right now I'm looking at this, and one of the things that you're seeing is that the dividends have been steadily increasing, which is good for shareholders to get some money back. They do have share repurchases, but they've been kind of trimming back on those a little bit. Maybe they're trying to be a little bit more opportunistic. They do have some good free cash flow margins, but they're leveling off right now from last year. I guess we'll see, man. Let me look at this on a quarterly basis. Trailing sometimes can get a little bit misleading. Let's see. They're doing about operating cash flow. Man, they had one really strong year. What was this? Investing cash flow. They are heavily investing back into the biz. I don't know, man. Once again, Buffett sees something. I don't see it. What's the market cap on this? Let's see.
I think it's 55.
55 revenue of that, net income's 3. That's not a lot. Like, I don't know. Let me see. Hold on one second. And then let's just look at the debt real quick. So long-term debt. Okay, so this is good. They've been paying back their debt. but that's kind of leveled off as well.
Mm-hmm.
What do their interest charges look like?
That's a good question.
Shareholder equity. Ooh, this is good. Shareholder equity is going up. So that means the price to book is probably about 50% right now. Price to book was much higher before. They lost a lot of that when they bought Anadarko, and they probably took a good amount in goodwill, which I'm sure that they're depreciating somewhere. Hold on. Let me just go back to balance sheet. Let's see. Goodwill right here. Oh, they wrote down. They never took a goodwill. Interesting. Total assets about 74 billion. Liabilities, total debt is about I'll have to dig into this a little bit deeper, figure out what's good. Maybe this is like a long-term play on something.
I think it's a long-term play on the Permian, man. I mean, if you just look at the portfolio, there's not much to it other than like the Gulf of Mexico. I really shouldn't say too much about this, but a lot of these are in decline. You don't have a lot of room left on a lot of these opportunities, and that's all I'll say about those. The Permian is probably where the most value is for the organization. They're making about 323,000 barrels a day. And that's if you include the gas aspect of it, the NGLs, it's 567,000. That's not including the Crown Rock acquisition as well. And you have a few of these other pieces in the portfolio: Algeria, Oman, UAE. So I feel like a lot of these, it makes it really. They have a really simple portfolio. Like I think if you think about it in that perspective, it can be sliced and diced up very easily. And really, in that respect, somebody like an Exxon would be extremely excited about those Permian assets. I know a couple companies that would be really excited about, the UAE or Oman resources as well. So, makes you think.
Yeah, I mean, his average price is 50, which is not that. I mean, to be honest, not that good if you think about it. Like all the other areas where there have been a lot better returns. And this is almost 5% of the portfolio. Interesting.
Yeah, I don't know.
This is one of those things like that I'll never understand about Buffett. Like his play on Liberty, that was the other thing. Like I never really got. I know some people said, oh, maybe there's some assets on Sirius XM that could be worth a lot. Where is this? What I'm talking about is here.
Yeah,
it
it's
is,
changed
right here.
names a few times. Yeah,
and it's funny because he just sold a portion of it. So yeah, I don't know. Like I said, I don't know what a lot of the recent moves, like what the moves are. I understood his play on the Japanese equities. That made a lot of sense to me. I'm not sure about the rest of this stuff. I don't know. Me personally, when it comes to energy, man, I just, me, I have my shortcomings with energy.
yeah.
It's not as predictable. So here's what we could do real quick, because we have a good amount of time. When you're investing in energy, there's like 3 or 4 things you have to, number one, understand. Throw DCFs out the door. Like just take a DCF, put it into a paper ball, and fucking chuck that shit out the window. Okay. The reason why is because there are so many variables that can go into the commodity price of oil that whatever projection you think you're running, just toss that shit. It's not going to work. Now, that doesn't mean every single sector within the oil and natural gas thing are the same, but for upstream, it's definitely garbage. Now, for midstream, you could probably make a good justification to use something like a DCF. The only problem is most of the midstream players also have some upstream assets in there as well, which pad their returns. So it just makes things very hard to quantify. And so, yeah, I mean, at this point, I would say when it comes to energy, you'd have to be very like directional. So if oil prices are really low and you think they're going high, then you buy into energy. And you buy some of the best ones that can manage their cost structures. You understand how much their lifting costs are, because I think that's another thing that people don't understand. So, when you do oil and natural gas, there are certain projects and certain businesses that have absolutely very low lifting costs, and then there are others that have really high lifting costs, and that ends up that ends up like making your break even price really high. The hard part is understanding with the break even for every single project that may be under some of these companies, and let me explain why. There was a time when oil and natural gas went bust, and then you had all these companies come in and buy these assets super cheap. So essentially, they got something for a significant discount. So because they got it for a significant discount, which means that they didn't have to do a lot of that capital spending that usually happens in the front end. And I'm sure Matt can talk about this, but let's say right now you have a rig in the Gulf of Mexico. The operator of that rig went bankrupt. You bought that rig from them when oil prices were, let's say, $30. Now, their break-even cost, because they took on a shit ton of debt in order to finance the construction, the exploration, the permitting, and everything, could have been like $80 a barrel was their break-even, right? So now most of their cash flow is being diverted to debt holders. But in bankruptcy, those debt holders, they get kind of like turned into equity holders. And that equity holding position now ends up with a much, much lower cost of capital, because essentially all of the costs that were paid were front loaded by the previous equity holders, which means now you're basically chilling on a great asset, and your break even, instead of being $80 a barrel, is probably closer like 20 or 30. And now you can literally, for the next however many years, generate a crap ton of cash flow because you bought assets on the cheap, and you're basically chilling. So a lot of times that's where energy really comes in, and that's where you can make some money. When energy prices collapse, look for companies that have spent the last 5 years developing these resources, and now they're so broke that they're going out of business. Buy up their debt on the cheap, and then when the debt ends up getting converted to equity, you sit in a very favorable position to benefit as a shareholder, or at least until what is that thing called? Until oil prices come down again. The one thing that sucks, and I hate to say this because this is just some of the realities that we have to face. Retail shareholders almost never get the opportunity to participate in the upside portion of the mix. The reason why you have so many oil and natural gas billionaires is because they have the capital during the right time to come in and buy up these assets on the cheap. And then once they have these assets on the cheap, they can make money for the next 5-10 years without doing anything really. Do you know any examples like that? I can give you a few examples of something like that, but do you have any examples of something like that, Matt?
Yeah, but I probably shouldn't talk about those. You're 100% right, Chris. I think it's a very cyclical stock, right? You have these few kind of companies in here that you can literally sit back and wait to pick and choose, right? And I'm not saying Oxy is a bad buy right here. I'm just saying it's not the optimal time to buy. The time to buy, especially, is when the tide goes out, as Warren likes to say. And I hate to use this analogy on a company that he's buying, but Chris is right. You get to see when oil prices drop, and it's a very cyclical piece of it. Oil price goes to $40 or $50. You get to see whose debt is low. You get to see whose operating costs are low. You get to see who's able to stay in business for longer, and you're going to be able to see who's going to get picked off and eaten like a bug. And you have these companies that have really good management that are focused on making sure that, one, they invest through the cycle, meaning even when oil prices are low, they have enough capital and financial footing and framework to be able to continue to invest. So they're not swinging like a pendulum, invest now, don't invest now, invest now, don't invest now. they still have that opportunity to like pull and and step on the gas pedal and pull off the gas pedal, but they're not completely putting on the gas pedal and hitting the brake, right? I think the companies that I've seen excel really well, I don't want to get myself in too much trouble. Exxon, right? Even during the oil price environment that we've had over the last 10 years, they continue to step on the gas in Guyana. They looked and they said, okay, it doesn't matter if during the pandemic we're still going into, say, some sort of debt because we see the long-term potential of Guyana. And during that same time period, they've consolidated their portfolio to focus mostly on their two crown jewels, which is the Permian and Guyana. And that's, if you don't know about the Guyana story, that's another story. We've talked about it in the past, but it was probably very early on in the Cashflow Chronicles days. That's literally some of the most astronomical turnarounds, not turnaround stories, because it makes it seem like Exxon was in a crappy place, but to literally develop a play and develop like a new oil field basin, from literally 0 barrels to going close to a million barrels within the matter of 15 years is pretty impressive. And so eventually we could talk about that with Exxon and they're continuing to sanction projects there, which is, talk about low break-even costs. Chris was kind of talking about those things are in like the $20 to $30 barrel range. But
for Guyana, are these offshore assets?
Yeah, they're all floating production storage offloading FPSOs. Okay. They do bring back some of them, I believe, but you have to think Guyana doesn't have a lot of local demand. It's a nation of about 300,000 people. So the majority of that oil should be lifted and probably put somewhere else, if you think about it in that perspective, right? Because there's not a huge local market. Now, some of it obviously could go to other parts of South America as well. But yeah, I think a lot of them are FPSOs. And I think right now they have 3, if I remember correctly, in operation. They're about to start the 4th. And we're not talking small FPSOs. We're talking, the first one was rather small. I think it was 150 or so thousand barrels a day. The next 2 were over 200,000 barrels a day of lifting capability. So those alone, those 3, we're talking about over 500,000 barrels a day. The last few that they're trying to sanction are also, I think, in the 200,000 barrel a day range. Like, these are massive, and they've discovered since 2015. That was their first discovery at Liza. I think they've discovered, I'm going to get the number wrong, but their wildcat success rate is in the 90 percentile. Their basically their production continued. Yeah, exactly. Here's kind of the thoughts here. So obviously we're not up to 1 million barrels a day yet, but you have production coming online later this year of Yellowtail, and then you have a couple other projects in the works. And so I'm not talking bullshit, right? 120,000 barrel a day FPSO started up in 2019, 2020, 200,000 barrel a day Eliza Unity 2. Payara was a 220,000 barrel a day FPSO. I mean, these are massive projects. So much so, Akechi just mentioned this as well, so much so that Venezuela is over there potentially threatening the border, to basically say, because if you actually look at the maritime border, depending on how you draw the Guyana border, you could draw the maritime border going, kind of north towards Trinidad and Tobago, or you can kind of draw it going eastwards, which means actually a lot of these assets might sit in Venezuelan waters. And so that's some of the things that is kind of being contested right now. But for now, there hasn't been any problems. But who knows what can happen? We've seen what happens with Venezuela and the state taking over assets with Chevron.
Because of its proximity to Venezuela, is it mostly like heavy sours, or is it like sweet?
I don't think so. I think it's actually pretty sweet stuff. I don't know exactly the fluids, but last I checked, from what I hear, it's not anything like what we see in Venezuela. So it's pretty good stuff from what I hear.
What's interesting is if this production timelines actually pan out, which more than likely they will, this could break OPEC's back to a certain degree. Because I mean, if you look at the cuts that OPEC and team have put out, basically a combination of U.S. output increases if Trump gets in office, plus Guyana increasing, Brazil probably increasing, you're going to be in a good position for oil production going forward. So a lot of the leverage that OPEC has been able to let's just say OPEC plus has been able to exert is kind of going to diminish a little bit. And then even our utilization should eventually top out, but that's not for like a couple of decades. So I'm not worried about that. It's interesting though, because I didn't realize until I started looking at this chart, until you mentioned it, that 25 is right around the corner, which means you're looking at close to 1 million barrels getting added that weren't there in 2019.
Yep.
And a lot of the cuts that OPEC has been making, how many what's the total cuts that they've done? About 3 billion? No, 3 million a day.
That's a lot. Yeah.
Huh. It's interesting. Yeah. So this once again goes right back into we're likely to see muted inflation expectations going forward, so
yeah, and
we'll see where things go.
And one of the main reasons people might not necessarily understand this, but hopefully this clicks. Why is Chevron interested in Hess? That million barrels that you just showed up into 2027, 1.2 million barrels a day, Hess owns 30% of that.
Oh,
so Hess actually is, and there's probably some debate about, whether or not, Exxon would actually let Hess sell to Chevron, because there's something called preferred ownership. Like when you get into these projects, you have the opportunity because, people can buy and sell out of these things, but you have pref rights, right? So the thought process is like, well, would Exxon and CNOC, the Chinese National Oil Company, who owns 25% of this, Exxon owns 45%, Hess owns 30%, CNOC actually owns 25% as well. They were sitting there saying, well, even though you're selling the company to Chevron, doesn't necessarily mean we're going to let you get away with selling the Guyana assets. Maybe we want to buy them. Maybe we want to have that opportunity to take them on and buy them out from underneath you, instead of necessarily Chevron getting the opportunity. Because you have to think, does Exxon really want Chevron, in the project, that maybe they have differential opinions about technical forecasting, etc. Maybe they do business very differently. You never necessarily know. Everybody that you deal with does business slightly differently, and some people are more operational heavy, some people are more forecast heavy. All that particular piece plays into it, but gets you to think a little bit about how some of these projects actually pan out and work. But there was another piece I was going to say in there. Yeah,
I just hope the Guyanese, they're smart enough to go the route of Norway and not go the route of some of these other idiotic companies and countries where they take majority of their oil wealth, reinvest it back into long-term initiatives for their local economies. Because Guyana is not a very rich country. It's a great country in terms of culture, but in terms of total wealth, there's just not a lot of natural abundant resources, nor do they have a growing, economic scene with a modern industrial service-based economy. So the thing is, oil is a great thing for that area. Now, the thing is, it all depends on the local politicians and how and hopefully it's not some greedy, corrupt ass motherfuckers who basically spend the natural gas and oil wealth. Well, not natural gas, but mostly oil. Spend the oil wealth on themselves, because this is typically what happens. You get in power and you want to stay in power, so you spend money on public works. You don't take into consideration the long-term ramifications. So you give people, it's like the Romans used to say, just give them entertainment and bread, right? And keep them happy. Yeah. And then the entire time you're lining your own pockets with money. And I'm sure that some palms are being greased. Don't get me wrong. Oil and natural gas is one of those industries that it's so much money in the industry that there are crumbs that people live off of that fall from the table. But these crumbs are so freaking big that they can change your life and the next 5 generations of your family's life. But hopefully, there's some decent politicians in Guyana. Bread and circus. That basically say, you know what, let's take our money, put it into a trust that basically go towards the benefit long-term of the Guyanese people. so that this way it enriches the country overall. So I'll give you an example of a country that did that, like Norway. They took all of their oil wealth from their North Sea, because there's oil in the North Sea and natural gas resources in the North Sea. They took all of the profits from that and they reinvested it into the stock market, and actually did it via like good indexing and everything else. And right now, Norway per citizen has almost like $2 million per citizen right now. I'm not saying like, oh, every citizen has $1 million in their bank account. No, it's just there is a national trust fund that Norway has that literally that supports their entire like population, so that in the future they can substitute a lot of social programs. They can do like capital improvement projects, all from the returns of the underlying assets, even though oil is not going much higher in terms of like providing more income for these guys. So one of the largest sovereign wealth funds on the planet is Norway's. Let me just show you guys what I mean. Hold on. You know what I'm talking about, right?
Yeah, 100%. It's like $1 trillion fund at this point. And you have to think Norway is not a very big country, so to have $1 trillion sitting there. But I think that there's been a lot of hate as well, because not hate, hate's the wrong word. There's been a lot of animosity as well, because Norway is a very front-leaning country in terms of emissions and kind of being on the, I don't want to say socialist agenda, but more towards the greener climate change agenda of, say, the 2015 Paris Agreement. And so they push back a little bit about investing in oil and gas companies, but it's like you're almost biting the hand that feeds, right? Because Norway still has this massive amounts of oil wealth that's continued to produce in production. There's several 100,000 barrel a day oil fields that are in Norway, and if you think about it, that's how their wealth fund got started. And so the fact that they're trying to back away, it's the same sort of situation with the Rockefeller family saying, oh, we're not going to own fossil fuel companies anymore. It's like, you kind of know that's how you guys made your money, right? So there's just a little bit of interestingness going on in the world right now with respect to some of these funds.
From the latest data that I'm seeing, I mean, this is from 2021, so maybe it's not as accurate. I'm trying to look for Norway's fund. It's about 1.3 billion in 2021. I wonder what it is today. Hold on. Norway Sovereign Wealth Fund.
You said 3 trillion in 2021?
No. They had one right now. Okay, so I'm seeing in April 2026, I mean, 2024, it's $1.6 trillion.
There you go.
And the total population of Norway total population is 5.4 million people. So imagine 1.6 trillion, divide that by 5.4 million. It's up there. You know? So
that's what I think. Honestly, I think that's something that we should, like, if I was in American politics, which I'm not, but if I was, it's how I would mostly structure Social Security. But I feel like right now we don't do that. We kind of just have it up in the air as investing in treasury bonds and God knows what else. We don't actually have it invested in the stock market. But imagine if you took all that money that came in from the U.S. tax bills associated with Social Security taxes that everyone has to pay, and you put that into the U.S. stock market, the amount of wealth that would generate, the amount of money, if you think about it, that money doubles every 7-8 years. Without that money, imagine how well it would do with that money. But then again, you have the potential to overinflate the U.S. economy as well. If you're investing that much money, $200 to $300 billion a year into that. Anyway, but it just gets you to think a little bit about, does the U.S. manage some of the money that we get from a tax perspective appropriately? And I would say the answer is no.
Yeah, no, they take on the U.S. basically. Here's a hot take. The Europeans, all of these other countries, they basically live off of the security that the US provides. Okay, so let me break it down a little bit. US right now, we spend about 700 billion a year in military, in defense. So a lot of people, they criticize the US saying, "Oh, look, the US spends all this money on the military and blah blah blah." But we're also the first ones to kind of like step into most regional conflicts when it comes to anything. So a lot of the Europeans, they kind of like just defaulted to us a little bit, like, "Oh, we're part of NATO. US, you're the big guys. You can spend that money. Go ahead, keep spending your money, right?" And so we're like, "Yeah, we're big. We can keep spending money. We're good." And the problem is they had not kept up with their spending. So they basically used the US to kind of subsidize their defense spending a little bit and instead spent that money on their social programs, which are good for people. I'm not disagreeing with that. The problem is now that the Russians are on their border, all of them are like, "Oh, whoa, 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 what are we going to do now?" And the US is like, "We'll back you, but we're not going like we did back in the day where we'll send physical troops to Ukraine right now." So I think right now with the discussion that Trump was having with the All In Pod guys, I was listening to it earlier today. We're in a place where the Europeans now are like ramping up their military spend. And I wonder what's going to happen with all of those social programs. Norway benefits from that too. Because I mean, if this was, I don't know, pre-1945, before World War II, I would have just said the US has enough power to take over half the planet. Literally, we could just go in there and just take it all over. Fuck it. Guyana? Fuck you, Guyana. We're taking all your oil resources. Get the fuck out of here. None of this shit belongs to you. Same thing with any of these other countries on the planet, like Saudi Arabia, all the Middle East. We could have gone there and said, all your oil belongs to us. From now on, you are basically a vassal state of the United States. And if you don't comply, we'll fucking just execute you. I mean, that is the policy that normally you would have seen throughout history. The US, though, has been this benevolent entity that's come along and said, "No, we're not going to do stuff like that," right? And to a certain degree, the reason why they didn't physically do it is because America's private companies did that, where they kind of went in there and made all these deals with some of these countries, and basically it leaned very favorable to the U.S. interests, but still gave like the locals their own what is that thing called? Own self-determination. But the U.S. has had dominating power via soft influence, and so the thing is that soft influence costs us something, and that costed us a lot of defense spending. But it also meant that we had a strong dollar because everyone traded in that dollar. So if you think about it, it's like colonialism, but without doing the thing that in the past where you would just take it over and then have your own people. Now what we do is we just send McDonald's, we send Starbucks, and that's how we colonize countries. We colonize you through economic means. It's kind of a very interesting dynamic, So
Yeah, well, I think I think that's an interesting point. But yeah, I agree. I think we don't go in and take over countries. I think we let them kind of establish their own democracies and things.
we let them think that they have a real like control, but essentially all of them are using iPhones. All of them are drinking Starbucks, and all that money is coming right back to Uncle Sam. So you know what I'm talking about, Matt. We just kind of bring capitalism to them, and then we just kind of like milk them slowly. And it's I think it's a great business model, to be honest with you. The problem is a lot of them are turning against us now.
Yeah, I think it's pretty funny because I lived in Trinidad and Tobago for a year and a little bit, and the amount of like bad mouthing I heard about the United States, and but at the end of the day, it's just like, well, they're still all drinking Coca-Cola, they're still all eating Lay's potato chips, they're all, Starbucks was the big coffee company there, so it's pretty interesting. You're McDonald's was a big thing there. It's interesting in that respect. But I think, there's that.
It's economic colonialism, and it works it works beautifully, to be honest with you. Because I mean, you look at the S&P 500, right? A lot of people will say this, well, you could just invest in the S&P 500. Yeah, but all these companies that are in the S&P 500, how did they all become super rich, like in terms of like net worth, value, all that stuff? Well, it's because the US has applied economic colonialism to a lot of these countries, and basically just all you got to do is just let us in, let's set up a couple of McDonald's here and there, get some Pepsi distribution up in there, and now we've got you by the balls.
Yeah.
So.
Well, the one thing I did want to mention, because Junebug asked it earlier, specifically the difference between what it means upstream, midstream, and downstream, right? And so let me give a little bit of thought to that. So I'm historically been working in the upstream part of the business, which is the actual getting of oil and gas out of the ground. So think about it before it's been refined into its specific products, right? But in order to get that to the place that it needs to be refined, the refineries that make it into the gasoline, the plastics, the tars, all that sort of stuff that, you have as an end user has to go through pipelines, right? So that's the place of getting it from the big oil fields.
Not just pipelines, just shipping also. Anything that basically, any medium that you're using to ship. So because I know sometimes like that can get a little confusing, but even those things like not container ships, like oil cargo ships are considered midstream. And then you also have natural gas stream, like those
LNG.
giant ships. Yeah. Sorry.
The LNG tankers. Yeah. So there's a whole bunch of that going on. And so that's an important piece of the business as well. And eventually, I think we've had Steve on in the past in some of our longer Cashflow Chronicle episodes where we've gone like a couple hours, where he's talked a lot about, energy transfer and EPD and all those companies that really make a lot of their bread and butter off of being basically the toll roads and getting oil and gas to the right places. And obviously taking a small percentage of that being the toll road. And then there's the actual downstream aspect of things. So that's actually putting the products and refining the products. Basically, if you think about it, it's separation of all the oil into its components. If you think about what actually oil is, and I actually discussed this on a podcast with Vince earlier, because he asked me a little bit about it. If you think about oil, if you kind of think about it, it's like soda, right? Soda isn't necessarily one thing. Like soda will consist of water, CO2, it'll consist of syrups, it'll consist of sugar and flavorings and everything like that. So the refining aspect of things is taking what, kind of the energy soda, I guess we can kind of call it, and dissecting it into its specific components. So you're actually then being able to have the water, the sugar, the etc. But in this case, instead of that, it's refining it into the methanes, which obviously is going down into, say, the LNG, or going directly to homes to be able to heat them. The ethane, the propanes, which obviously people use propane pretty significantly to kind of heat their grills and stuff like that and cook with. Then you have the butanes, the stuff that goes into lighters. And then you have like the pentanes, hexanes, heptanes that all kind of go into like your fuels, your petrols that go into your car. And then you have everything up to like the tars and stuff like that, the C30 plus sort of material that's extremely heavy hydrocarbon chains that doesn't necessarily have use in, say, everyday life, but it could be used for, paving roads and stuff like that. So there's a bunch of different things that it's kind of broken down into. And then obviously you have, is it being used to make plastics and stuff like that as well? But that's really the component of it. So I work in the upstream part of it mostly, which is actually getting it out of the ground and working with countries to be able to figure out how to market it. But you have to think there's a lot of different ways to think about the upstream part of the business. I was talking about earlier, and this maybe will give you kind of a key thought. When you go into a country, you have to think, is this a local market that I'm selling this to, or is this actually something where I'm going to have to develop an LNG plant to be able to ship the natural gas? And that's actually a key part about what Exxon's going through right now with Guyana. There's only 330,000 people that live in Guyana, less than 1 million people. And they're not going to be using all that natural gas. So what are you going to do with it? Well, right now they're just re-injecting it right back into the reservoir. They're not actually producing it to sell. And if anything, they might flare some of it to be able to kind of keep pressure up in the facilities. But they're not out there selling it to anybody right now. They're just re-injecting it back into the ground to maintain reservoir pressure and stuff like that. Eventually, Guyana is either going to have to come up with an LNG facility to be able to sell that, because obviously 330,000 people are not going to be using the billions of cubic feet, the trillions of cubic feet that is going to be in these reservoirs. So you have to think, what are you exactly going to do with all of this? And if you look at a lot of the major oil basins around the world, this is something that's pretty prominent, right? Who's actually getting this? Like Qatar is exporting a lot of their LNG. They're actually, one of the largest LNG exporters in the world, and they're making a crap ton of money off of it. So they're actually, from a GDP per capita perspective, doing really, really well with that respect. But they still have to use some of it, to heat their own homes and cook and, do stuff of the like. But you have to recognize that that's all part of the upstream business, is understanding, how you actually to sell it. Oil is easy because it's a liquid, right? You can put it in a tanker. That's pretty simple. But when it comes to the natural gas part, you have to super pressurize it and super chill it, to minus 270 degrees Fahrenheit for it to actually be able to shrink and liquefy itself. And it'll shrink down to 1/600th of its size. And so that's what a lot of the LNG plants that like Chris and I talk about with like NEXT, TEL, all that, that's what they're doing. They're kind of taking the natural gas from the Haynesville, the Eagle Ford, the Permian, super chilling it, super pressurizing it, putting it into these tankers so they can send it, at 1/600th the size, send it over to Europe, send it over to Japan, send it over to Singapore, and then repressure or depressurize it and put it into local markets at a much higher margin. And that's the reason why they do it. Anyway, but hopefully that helps out a little bit with explaining a little bit about the differences of the oil industry. Because I talk to my buddies all the time. They're like, dude, we have oil companies around here. I'm like, not the same kind of oil, man. Like that's like heating oil. That's already been refined. That's people, that's already had 18 different people get their hands on it. I'm talking about getting the oil straight out of the ground, so it's a little bit different, and hopefully that adds some color to what you guys are thinking.
So there is one industry that's popping up and is gaining significant industrial might that could be something me and you should look at in the future. I'll give a brief thing right now, but one of the things that, when you have like these giant energy transitions, they don't happen overnight. They take time, especially because it's very capital heavy. One of those is this right here. Okay. Can you see my screen? So a lot of ships right now, they're powered by something called bunker fuels, right? Which is just giant oil. The thing is, a lot of the newer ships that are coming around, like if you see this Meyer Turku and Meyer Wharf, these are giant shipbuilding shipyards and companies. These are the kinds of ships that they're making: new cruise ships, new like passenger ships. They even have gas tankers, like livestock containing ships, blah blah blah, container ships. But they're essentially, a lot of their newer generation of ships are actually running on methanol. Have you heard of that by any chance?
Well, methanol?
Yeah. Like in terms of using as a storage medium. So it just makes more sense to have it. It's, from both an economical standpoint and also from like a carbon reduction standpoint. So a lot of these companies are starting to get, a lot of the newer like shipping companies are getting ships that are methanol based. Now here's the cool thing. There are only a select few companies around the world that have the infrastructure to support these ships. One of these companies is a company called Methanex. Have you heard of them before? No? Okay.
No.
Methanex at one point was only worth about $2 a share. Right now they're worth about $48 a share. But $48 a share is still like about, I think, $3 billion total market cap. But they have operating plants in a lot of the world, right? So basically they have the infrastructure kind of like built out already in certain parts, and they're likely to keep building more. But like we were just talking before about, probably being it's almost like, how do I describe it? It's like being a gas station for giant ships. I mean, isn't that kind of cool? Free cash flow is likely to grow over time. And as they keep building more and more of these things, it just means that there's more and more cash flow. And literally, I don't think anyone is really paying attention to this area of development, but it's something to definitely take a look at. And maybe me and you could work on some research on this and then talk about it and then see where we go. Because right now there's a lot of capacity that's being somewhat added here and there, and we'll see what happens. But basically, it looks like there's going to be a lot of methanol demand going forward. So, and then at the same time, in terms of operating income, these guys will do really well. So let's like I said, let's do our research. Let's do some cash flow analysis, and then we'll come back.
Sounds pretty good. Was there any other opportunities or things that you wanted to talk about? Do you want to take a moment to read some stuff from the chat? I don't know if you saw anything come through that was really enticing.
Yeah. Ekichi Griffith just said there's a Methanex here in Trinidad. Yep, that's right. Because the thing is, like, I want to know how Chris stumbled upon this researching CCL. Actually, yeah, I've been keeping my eye on a lot of the earnings statements for what is that thing called for the cruise lines, because I'm in heavily in the cruise lines. And one of the things that they keep mentioning is this transition to methanol and how it's going to save them in terms of efficiency. So then I started researching. It's like, oh, is the cruise line industry the only one that's kind of like switching up? And it turns out that that's not the case, that a lot of other shipbuilding companies are in the same process. The only thing is, ships right now for the last 30 years are still going to be like depreciating over time. And the newer ships that come on with these newer features, they'll take more and more market share. So it's almost like a growth story going forward. So, yeah.
Yeah. I mean, in terms of price to earnings, it's only 20x. And especially if you think it's going to be a growing industry. I don't know what kind of buybacks and stuff they're doing. I'm not exactly sure how capital intensive it is in terms of the units that they have to put onto these things. But yeah, it could be an interesting conversation. I think, since what is this, 2000? Yeah, they're up about 1,500%, 1,600% since 2000. So doing rather well.
Yeah, I mean, from what I can see, that they're still impacted by ups and downs in the commodity space. But as you and I both know, midstream is where you want to be long term in natural gas, oil anyway, because those are the ones that are going to be able to kind of like give you that long term value without nearly the amount of like bottoms falling out, basically.
They're insulated a little bit from the price, is what you're trying to say.
Yeah.
Which, yes and no, right? Because obviously if the price declines, then obviously people stop producing as much and not producing as much. You don't get paid as much, but they're not as impacted from like an overnight. Like your revenue won't go down 50% overnight in a energy transfer or a midstream company like it would for, let's say, an oil and gas company if oil prices were to go to 30 or 40 bucks.
Yep. So. All right. Talk to you later, man.
Cool. Appreciate everybody's time. And yeah, we will, we'll ask you offline. When do you think is the next best appropriate time to check in?
Let's do next Monday.
All right, man. Sounds perfect. I will see everybody then. Have a good one.